Good afternoon and welcome to ActivTrades Monday Market Matters webinar. Ready for an interesting week in the markets? And today we're here to talk about how to use the CoT report, the Commitment of Traders report in your trading. So what are we going to talk about today on our Monday Market Matters webinar? Well, as I said, we're going to talk about the Commitment of Traders report, a very useful tool, but sometimes something that sort of overwhelms or intimidates people. And so what we're going to do is we're going to have a very basic introduction to it, and we'll talk about how can we interpret it, and most importantly, how can we use it to trade. And I'll share with you a few examples of my own experiences over the last few years. And then, as always, we'll switch across to the live markets to see how markets are bearing up for the start of the US session, which will be opening in about 27 minutes' time. Before we crack on, it would be interesting to know what, if any, experience you have of the Commitment of Traders report. Are you aware of it? Do you use it? Have you never even heard of it? Okay, or are you aware of it but not sure how to use it? Okay, it'd be interesting to know what your own experience is, and I'm always keen to see and hear how other people have experienced and interpreted other things. So, hello all, great to have you here. Simon says it's his first time hearing it. Wakas says it's aware of it but never used it. Ola says it's new to me as well. So that's great. That's what these sessions are here for. Okay, so to be able to do that. So Max says yes, using tradestar.com. So I'm not aware of that, but what I will do is share a couple of bits of insight. Steve says I've never heard of it. That's great. That's good to know. Okay, these sessions are here to help educate you, here to help sort of just move you along on your own journey. Yeah, I'll be happy to share, just as I said, just a gentle introduction to elements of it that might help you. So, as always, you're very welcome here on Monday Market Matters, and I do appreciate that we have a truly broad range of experience of traders who join our sessions, from those who are just at the start of your trading journey to those of you who've been trading for a good while, and you're all welcome. There's always something for you to take away. And I do also recognise that even though this is the English desk, we have a broad global spectrum of individuals who join us from all around the globe. You're all very welcome at ActivTrades. We find it great to see you all here. Okay, you're always, as I said, very welcome. And in Monday Market Matters, the whole idea is to set you up for the sort of right frame to start the week as we prepare for the opening of the US market. So every Monday, 2 o'clock London time, we look at the kind of major news that's coming out for the week ahead. All right, we have an education piece, which is today is all about the CoT report. Then we always have a little look at the ActivTrades platforms and tools that you have access to as a client, and then we finish with a look at the live markets. Okay, at the start of the US session. So there's always lots to basically to cover, always lots for us to interest, and plenty for us to cover. So we'll crack on. So Bernard says, thank you. I live in Perth, Australia. A fabulous place there. Okay, Bernard, fabulous. I'm very jealous of you and stuff. I was there about 20 years ago for the Rugby World Cup. A lovely part of the world and stuff. So you can trade and then you can go out onto the beach if that's your thing. Fabulous. Anyway, so we've always got lots to talk about, lots to cover. So let's talk about the news now. I never make an apology for saying that every week that it is important for you to know when the news is coming out. If you're a new trader at the start of your journey, I don't expect you to be able to interpret the news, but I do expect you to know when that major news is coming out, because it's that major news that might induce volatility into the markets, and volatility it's a double-edged sword. All right, if you're prepared for it and you know what you're doing, it can be the wind in your sails. If you're not aware of it, or if you're on the wrong side of it, well, then it can make it for a trading challenging session. So it's important to know when the news is coming out, and you can find that out on the economic calendar. There is an economic calendar on the ActivTrades website and elsewhere on the internet, so there's no excuse not to at least know the days and sessions for when the big news is coming out for that week, because you want to plan accordingly. So Not a lot of major news coming out today, and that's not a major surprise. Very often Mondays can be a little bit thin. Normally Monday is about dealing with perhaps hangovers from any big news on Friday, or if there have been any sort of major geopolitical events over the weekend. And of course, what we have seen in the this last weekend, okay, is whether there will be any sort of outplay or downfall from the events that happened with the Iranian president yesterday, and we'll see what occurs from that. Okay, but there's no major formal news reported today, and that's pretty much per course. However, we do have quite a bit of interesting data coming out, especially if, like myself, you're here in the UK and you trade an awful lot of the sterling, okay, GBP. Well, then invariably what we see is that we've got a bit of that data coming out this week. But tomorrow, okay, we've got major news coming out from Australia, including the meeting minutes from the last Royal Bank of Australia meeting. So people will be interested to see what kind of sentiment that gives us. Also, the Canadian inflation rates and also the Japanese balance of trade. I would suggest probably Wednesday is the kind of is the day that most traders will be looking at. Namely, we have overnight for me here in the UK. We've got the Royal Bank of New Zealand, their meeting, okay, with regards to their interest rates. We've got UK inflation numbers. That's normally around about 7 o'clock London time in the morning. And then in the evening, we have the American FOMC minutes from their last meeting. And so with both the UK inflation rate and the American FOMC minutes, traders will be fascinated to see what, if any, insight they can glean as to when and if there will be interest rate cuts both in the UK and the US. So I would suggest, as I said, Wednesday might well be the major day for that. Thursday, we've actually got some German manufacturing PMI data, which could be useful, and this is Japanese inflation rates. And then on Friday morning, we have the UK retail sales. And so with the inflation rate and the retail sales, we'll get a good gauge of the sort of the strength and the sentiment within the UK economy. And also there's the American durable goods orders in the afternoon. So as I said, you don't need to basically be able to, completely analyze that data, but it is important for you to know when that data is coming out, ladies and gentlemen. It is really, it's really quite important. Simon has said, when's your? Yeah, that was out today, Simon. Okay, that you'll see that out and about. But let us talk about our main educational element for today, which is all about how to use the commitment of traders report in your own trading. So, as the slide says, what if we could get an idea of where the big dogs are doing their business in the financial markets? What if we could get an idea of how the major players are positioning themselves in financial markets? And maybe what if we could see where there are divergences between how the major players see the future direction of an instrument? And if you think about that, you could ask yourself the question: would that be useful? Would that be telling insight into how the players are positioning themselves? Well, thankfully, we can do that, ladies and gentlemen, and it's called the CoT report, the Commitment of Traders report. And as the name implies, it is about giving you insight into where the major traders have their commitment, all right? And what we're going to do is we're going to share just a basic introduction today. I mean, the CoT report itself, you could really go into it's quite a rabbit hole, and you could get into some really fascinating insights of the data. And some of you from being at this session might actually take that on board and wish to go deeper, and that's absolutely fabulous. It's absolutely fantastic. But today, I'm just going to try and share you a basic introduction and also about, where and how it could be useful for you. As I said, the CoT report, which I think you'll understand as we go through the slides, generally tends to be more helpful for, let's say, the swing traders and the position traders. But as I said, it doesn't matter what you trade and what instruments and what timeframes you trade. Having an understanding of the CoT report is a useful tool, okay, as part of your journey and education as a trader. So Bernard says, I get the CoT report on Saturday after the Tuesday report. Yep, that's absolutely right, Ben. We'll touch upon that in a moment. So What actually is the CoT report? Well, I've maybe a little facetiously obtained it as the sort of the big boy macro news. Okay, it's an insight into where the big boys are actually positioned. It is issued by the Commodity Futures Trading Commission, the CFTC, in Chicago, in America. And there is a hyperlink there, but what we'll try and do is I'll try and put in the link there as well, so to be able to find it, because it is the CFTC Commission put out a great deal of data. The CoT report is just one element of it. But what happens is the CoT report is released weekly, and it's released what would be for me every Friday afternoon here in the UK and Europe. But in the US, it's really released in the Friday morning. But what it is it is calculated from positions that have been reported on the previous Tuesday afternoon. Okay, and what it does is it shows open interest for the markets, which is broken down into 3 trader positions. So if you are trading at a particular size, okay, then you are duty bound to report your positions to the CFTC every Tuesday afternoon. And then what happens is that data gets collated and then it gets pushed out on Friday morning in the US, what would be Friday afternoon for those of us here in the UK and Europe. And that comes out every week. So we just have to take on board just a brief point that, as I said, it comes out on Friday morning if you're in the US, or Friday afternoon if you're in the UK, or as Bernard says, sort of Saturday, okay, if you're in Australia, Asia, etc. But it is reflective of data that has to be reported on the sort of the previous Tuesday afternoon. Okay, so it is already, it's already like 2-3 days out of date. However, what we're looking at is just getting an idea of where the real major players, how they are positioned, and that can be enormously useful for us. So this, as I said, just an understanding of what actually is the CoT report, and what we're interested in is what's called the short format of that report. There are, as I said, there are certain different variations of the report, and as I said, it's quite an interesting rabbit hole that you could go down, but for today, we're just talking about a basic introduction that will allow you to be able to understand and utilize it. Simon asks, are there other resources that offer less lagging data in terms of positioning? Good question. I suspect there are plenty of them at the institutional level, okay, but for ourselves, not really ones that I'm aware of, okay. The thing I would say is that, pretty much everybody uses that data from the CFTC, okay, in that terms, all right? Everybody uses it. So everybody is looking at the same data. Of course, they may interpret it in very different ways, and I'm going to give you one variation of that interpretation today. But most people are looking at and to basically to build and understand the CoT report. So, once you go on to the CFTC Commission's website, well, then basically you're looking into the kind of the reports, and you're looking for the reports from the CME, the Chicago Mercantile Exchange. As I said, there's lots of different options. You can have a futures only or a futures and options combined. All we're interested in here today as a starting point is the short format version of the futures only. Okay, that's all we're interested in. As I said, there's a huge amount more data you can go into. So there's a few rabbit holes you can really take yourself down in. But for today, we're just looking at the futures only short format CoT report from the Chicago Mercantile Exchange. That's all we need to look at, ladies and gentlemen. Okay, just take that on board. So I alluded to earlier that in the short report, there are 3 major trader groups, okay, or rather the position is broken down into 3 major trader groups: the commercials, the non-commercials, and the non-reportables and small speculators. So who are they, and what do they do, and why are they important? First one, the big boys, are the commercial, and as it says on the slide, commercial traders who are registered with the CFTC, showing a related business for which futures are used as a hedge. So this might be something like, a huge agricultural business, okay, who are involved in agriculture. Maybe they're in the hards, maybe they're in the softs, maybe they're in agricultural. So it might be things like wheat or corn, all right, or pork bellies or orange juice, etc. So these are commercial organizations, okay, and they use the futures, they use their future position as a hedge for their exposure. Okay, so those are the real big dogs, shall we say, for want of a better description. You then have the non-commercial. The non-commercials are comprised of large speculators. So this might be things like commodity funds, might be hedge funds, might be elements of investment banks, okay, elements of investment banks. And then finally, you have the third group, which is the non-reportables, which is the small speculators. So as it says there, small commercial hedgers, small speculators in markets, all right? So the data is broken up into these three groups. Really, generally, I tend to only be interested in the commercials and the non-commercials. Some people really like to look at the small speculators, as I said. You can interpret the data in various different ways, but I'm going to show you a very simple interpretation today that you could go away and start to utilize in your own trading decisions. So this is the short format, okay, and it might look like a lot of data, it might look not terribly exciting, but there is a wealth of information in here, and what this was the CoT report for this last week. So this was data that was reported last Tuesday, and the data was, announced and delivered last Friday. So it's for futures only positions as of the 14th of May, 2024. And it is for the British pound, okay? British pound futures contracts traded through the Chicago Mercantile Exchange. What we have here is, remember, we had the non-commercial, these are the banks, the hedge funds, okay? That's what we're looking at. And just take a note on this, okay? Just take a note on this, okay? They have 48,674 long contracts in play, and they have 68,749 contracts where they are short, okay, of the British pound. So just take a little note of that. Then, as I said, we have the commercial players, okay? The commercial players, they have 137,917 long contracts in British pound, and their commercials have 111,122 short contracts in the British pound there. And then, as I said, you've got the kind of non-reportable positions, which are the kind of small speculators. Small speculators are 32,589 short and 25,869 long, okay? But they also have, which is what people start to take an interest is the changes, okay? The changes. So for the non-commercials, okay, what we have seen in the last week is that they have closed 3,000 long positions, and they've also closed 4,800 short positions. The commercials, okay, the commercials have closed just under 4,000, 3,900 long positions, and they've added 2,257 short positions. All right. So just as I said, the first time you see that might be a little bit overwhelming, might be a little bit intimidating, might sort of see as far too much numbers and news. But actually, once you practice this every week, you start to get a little bit of an idea of actually seeing the let's call it the ballet, all right, the dance between the non-commercials and the commercials, and we'll talk more about that in a moment in understanding that, okay? But that's the data it comes out. As I said, it looks like a lot of numbers, looks like a lot of data, but actually with just a little bit of practice, a little bit of work, you can start to identify and read it quite quickly, quite easily, and start to get an idea of where people are positioned, where the big dog commercials are positioned, and how the sort of let's say the non-commercial, the big speculators are positioned, because that can be enormously useful and helpful information to us. So that's what the CoT report looks like. That's what the short format CoT report looks like, all right? But we're going to go deeper into, well, actually, how can we use it? What's the benefit to us as traders? What is this actually telling us? So there are lots of ways people can interpret that data, but one of the most important things is to see the actual positions of the categories of traders and understand especially the net position change, right? Now, if you want to do this yourself, then you can calculate this and subtract the short contracts from the long contracts. However, not unsurprisingly, if you have a positive result, that indicates that that category is net long, whilst so they've got more long positions than short, whilst a negative result indicates that you've got a net short position. I would not suggest, you don't necessarily need to worry about this at the moment. We'll show you ways that can show up at the moment. Today, all we want to do is be able to explain the CoT report and have a look at actually how you can utilize it and what it actually helps us. So you don't need to necessarily worry about this right this moment. It is just a little bit of insight on your journey. So that's all well and good having that data, but actually, how do we start to use it? What's important here? What can we use as, let's say, as a rule of thumb guideline? So many people in the past would have said that the most important thing is the actual change in the net positions of the commercial hedges, all right, the commercials. Why is that? Is because the commercial operators are generally believed to have the best fundamental supply and demand information. So if you're an agribusiness that is involved in cocoa, okay, the likelihood is that you probably have teams of analysts, huge investment in technology and networking connections that will give you the best understanding of the supply and demand information for cocoa for the entire globe. And from that, you are likely to make better positions or better decisions based on hedging your position based upon what your actual work is. Remember, these are not guys involved in the futures markets to hedge their position. They're not in there looking for profit. They're looking to offset any exposure. They're looking to manage their risk. So that can be enormously useful in terms of understanding what their view of the market is. All right, we'll look at a couple of examples in a moment. So remember what I was saying is that commercials, they are not in the market necessarily for profit. Okay, they are hedging positions. They are looking to transfer risk to their suppliers. They're using those futures markets to basically manage their exposures. What can sometimes surprise people is that the non-commercials are usually not as adept and not as good as you would have believed, which might be a little bit of a surprise. Those non-commercials, remember, they're made up of hedge funds, okay, speculators, investment banks, etc. They are looking at those markets as an opportunity to profit rather than as a cost of doing business, okay, as a cost of hedging their exposure to the business. So one of my gentle rule of thumb tips to begin with is using the non-commercials as a contrarian indicator. Okay, so what we do tend to find is the non-commercials tend to be, when they are heavily invested, that is normally a good sign of a trend in place, okay, or a trend beginning. We'll look at that in a moment's time. But as a rule of thumb, okay, as a rule of thumb for you to take away from today, when you're looking at the CoT report, use the non-commercials as a contrarian indicator because they are usually not as adept, not as smart an operator in that specific market compared to the commercial operators. So, as I said, that's just a very simple rule of thumb tip that you can take away and start to utilize to interpret the information. So there are lots of useful basically websites, okay, that can actually help you both learn about the CoT report, understand the CoT report, interpret that. One of the very simple, easier ones is one here which I use myself called cotbase.com. It's part of my own work. I take 2 or 3 different readings from different places, and CoT-base would be one of them. And I'll show you why, because it's an easy, simple way to interpret some of the data. So let's have an example of 1 or 2 times, okay, of how to use that CoT data along with my own models for certainly specifically in trading FX markets. So here's what we're going to look. This is one from an example from a couple of years ago. What we're looking at here is the Japanese yen, okay? Japanese yen futures. The non-commercials, okay? The non-commercials have 44,000 long contracts and 123,000 short contracts, okay? So, what are the non-commercials? Okay, the non-commercials are almost kind of getting towards 3 times more heavily weighted to the short side, aren't they? Okay, non-commercials. Let's just basically, excuse my drawing. I'm a better trader than I'm an artist. Japanese yen. The non-commercials. They are heavily weighted to short Japanese yen. Okay, so just take that on board. Okay. Just take that on board. And it's interesting to me is because actually my own model, my own STAM model, actually at that same time had the Japanese yen as actually the second strongest, all right? The second strongest as opposed to the other sort of 8 major currencies. But the non-commercials are heavily short Japanese yen. So just take that on board, okay? Just hold that. And here's an interesting thing. What were the commercials, just as an aside? The commercials were 193,000 long versus 122,000 short. So the commercials, okay, their bias is to the long side. So just bear that in mind, okay? Remember, the commercials are looking to always hedge their position. So if the non-commercials are heavily short, they are more likely to actually be long themselves because they want to hedge their exposure. But for this example, we're just looking at, in this case, Japanese yen non-commercials were heavily short the Japanese yen. So just bear that in mind. Because when we look at this other currency, this is the Canadian dollar at that time. And Canadian dollar, where were the non-commercials? Okay, the non-commercials had 59,900 contracts long, okay, and 40,499 contracts short, okay. So their net position, okay, was that they were more heavily long the Canadian dollar. So the non-commercials are okay, short, Japanese yen, I apologize, and they are long Canadian dollar. Okay, whereas my model, my own model is telling me Canadian dollar is the weakest, and Japanese yen is the second strongest at this time. So I'm kind of, as I said, I'm interested to see what's going on because my model is telling me the opposite from what the the CoT report is telling me about the commercial non-commercial traders. Bernard, it doesn't really matter about why they are long and short at this particular moment in this particular example. I just want you to be able to understand the information and just start to get an idea of where using them as a contrarian indicator. That's just what we're looking for at this particular moment. So let me just clear these pens down. And so actually, this was the price action at that time. This was the daily chart of the Canadian dollar against the Japanese yen of that period into February, into March. That was what we were in. We were in a downtrend, okay, in quite a significant, quite a lovely downtrend. And remember that basically the Canadian dollar, okay, the non-commercials, here we go. Remember, the non-commercials were invariably, they were long the Canadian dollar, and they were short the Japanese yen. But actually, the price action was the exact opposite. The price opposite is showing Canadian dollar weakness and Japanese yen strength. Okay, so this is the case of, as I said, of using the non-commercials as a contrarian indicator, because very often they are on the wrong side. All right, they're on the wrong side. They do not have the insight that the major commercial operators have, and that's what comes back to bite them in the behind on several occasions. So, it is always an idea and interesting and understanding to see, as I said, what is the price action telling you, as opposed to what is the non-commercials. How are they? Which way are they biased? Which way do they have more of a weighting towards? And that can be very useful for as I said, for the kind of swing and position traders. So here's another example. Okay, so this is a euro. So this is the euro FX at this particular period. Non-commercials here. Okay, non-commercials are long 239,453 contracts. They are short 93,000 contracts. So, if you net those positions off, what are they particularly? Which way are they weighted? So I would say, looking at that, the non-commercials, they are weighted to the bullish side on the euro. They have that many contracts. Just as an aside, have a little look at the commercials. What is the commercials telling? Commercials have got 220,000 long contracts, but they also have just nearly 400,000 short contracts. Okay, so the euro, the non-commercials are long euro. Okay, my own model has got euro starting to weaken off. Okay, from being top of the pile a couple of weeks ago, at the start of the year, is basically starting to slip down its ladder, the strength weakness ladder. So non-commercials are long euro. All right. Well, let's have a little look at how that particularly plays out. Okay, what's that? What is that helping us tell us? All right. So just bear with me 1 second. Let's have a look at this. Bang. And this is what was actually happening on the price action here. Price had been in an uptrend. So the euro had been strengthening against the dollar. And then we had run into this big round number, 125 here, which I'm hoping you can see. And then we had one top, we had two top, we had three tops, okay, and the third top was also a bearish key reversal. And then we started to make, bang, lower highs, okay? We started to make lower highs. So my strength v weakness model was showing me that the euro was weakening, okay? The non-commercials were heavily long the euro, okay? But the price action is starting to differ. There's a differ there, okay? There's a big differ. So what actually happened here? How did this play out? Well, bosh, that's the same price action. Remember we said three tops, okay? Basically lower tops, and then basically price rolled over and fell away. Remember what we just looked at on the CoT report? The non-commercials were heavily long. The commercials were heavily short. You might have had a kind of like a 4, 5, 6 week period of it coiling up, but basically price rolled over, and the non-commercials were a good contrarian indicator. They were heavily long, and actually the long-term price movement was to the south side. And that's how we can start to utilize and help utilize the CoT report, just to give us a little bit of insight into how the big boys are positioned. And if we're a longer term, trend trader, how we can use it to start to get ourselves ready for a big move. So, bosh. So what can we learn from all of that? Well, when the commercials and the non-commercials are heavily positioned against each other, this is when we can expect good moves, all right? And that's when I start to get interested, when the commercials and non-commercials are almost at extremes, right, in terms of their positioning. That is when we normally get a snap. That is normally when we can expect a good move, okay? And it's a case of generally the non-commercials are often wrong when positioning is at its extreme, okay? Not always, but as a good rule of thumb, and that's the thing we're sort of taking on board. And this is when we start to get good moves, all right? And When we get those good moves, when we get those good trends, that is what allows us as smaller traders to be able to identify and join those possible new trends, okay? Think of yourself like a surfer. This is what I try to tell traders. Think of yourself like a surfer. You know, you can't surf every wave. You're looking to try and surf the best waves, the biggest waves, okay? And if you're in a position to identify them beforehand, that starts to give you a little bit of insight. So Laura says that, yeah, can I explain my own model? It's quite simple. Every week I look at the major FX pairs, and then I have my own model which ranks them, and I'm always looking for which is the strongest. In that case, the sterling, which is the weakest, the pound against the Canadian dollar. So I'm always doing that every week, and I put that out to my clients, and it gives me an idea of where's the strength, where's the weakness, and I look to use that as a once again to help me surf the best waves. And when it lines up with CoT report, well, that gets me even more happier, okay, that when we can see that particularly happen. So here's an example of, this is a tool, as I said, you can use. This is a screenshot from CoTbase, and they have a free version, okay, and you can choose. So, for example, British pound futures, right? It might be showing you what the price moves is, but what we're really interested in here, as I said, is net positions, okay, commercials and the non-commercials, the large speculators. And as I said, when they are very, very at their extremes, that is normally when we might get a good move, and also when we start to see them flip. Okay, when we start to see a flip between, in this case, the large speculators going from being heavily short to heavily long, and the commercials going from being heavily long to heavily short. Okay, and invariably what we see is when there are extremes or when there's a flip, that is also when we might get the opportunity for a good trend, and that's what we're looking for. It also has in the small speculators. I'm sure there are lots of people who are able to use the small speculator data to help them with their trading, and fair play to them, good for them. As I said, today is just a very simple, basic introduction, but cotbase.com is free, and it can help you, just interpret the data. It takes that data which we just looked at from the short format, and then it actually, as I said, it prints it as a visual theme in the chart, and for some people, that might help enormously, okay? So just a couple more examples, all right, of utilize the information. So this was I was looking at the pound against the US dollar. This is at the same time, okay, the short format futures only CoT report for the British pound sterling. Okay, we had the non-commercials. Remember, they were long 37,900 contracts, and they were short 130,136 contracts. So the non-commercials are heavily short the pound. What are the commercials? Just as an aside, they are long 207,000 and short 96,000. So the commercials net position is long. The non-commercials is net position is short. But actually, look what the price did. Month. Okay, the price, having been down to the big round number 120, we bounced away off there nicely. Okay, so the non-commercials were a good contrarian indicator. Good contrarian because they were heavily short, right, at a time when pound basically was racing its way there against the dollar. Okay, as I said, we're looking for extremes. And then also as the non-commercials to generally be a contrarian indicator. Another example from exactly that same time was also, you can get a CoT report for the Euro FX versus the British pound. So we just looked at the sterling being strong there at that same time. But if we looked at just the report for Euro versus sterling, what we had was that the non-commercials were, basically long 3,500, short 3,000 contracts. So they were net long the euro, okay, against the sterling, whereas the commercials were 9,000 long positions, 17,900 short positions. So they are short the euro versus the sterling. And this is the euro versus sterling daily chart. And actually for that same same period, what we had been looking at is just price basically drifting down. That was euro sterling, which means euro weakness, sterling strength. And, once again, the non-commercials, they were biased to the long side of the euro. Commercials were biased to the short side in the euro sterling, and we can see actually how well that worked there. Bernard says, thanks. I'm learning lots. That's great, Bernard. That's what these sessions are for here. It's great. As I said, sometimes the CoT report can be a little bit intimidating, sometimes maybe a little bit overwhelming for new traders, but it's that thing of just take a bit of time, work your way through it. You don't need to go through all of them. So, I focus on trading sterling, so I'm always interested in what the sterling CoT report is every week, and then from that, as you get experience and confidence, you can build out your own process and routines. Okay, but that's great to hear. Simon says, quite honestly, Paul, every Monday I look forward to your calls. You give me motivation and a fantastic boost every week. Plus, being a workaholic, I cherish new opportunities to learn. So thank you, as always, for another great call this week. That's very kind of you, Simon, all right? Thank you. Thank you very much and stuff. The whole idea is to put these on to help educate you, just, set you right for the week ahead. And, we appreciate all the feedback. So that's fabulous. Thank you. Thank you very much. And Wakash says, by the time the report is released, hasn't the move already occurred? That's a good insight, Wakash. But what we're looking at is because these big boys, they are not as nimble, all right? They are not as nimble and agile as the small speculators. So for them to create a position takes time, okay? They cannot just change on a sixpence, all right? They can't just basically dump thousands and thousands and thousands of contracts. Well, they can, but what happens is that will just basically cause a stampede. That means you'll get worse prices, etc. That'll sort of set off panic in the markets, and generally they don't want to do that. So what we tend to see is, and this is why I said it kind of tends to suit sort of longer term traders like swing and position traders, is because this might be setting a trend that might set and run for the next few months, and you don't need to capture all of it. You're not looking to try and capture the exact turning point. You're looking just to capture a piece of that trend. So hope that helps you there. So here's your task. You know me, I always set you a little bit of homework to take away. Your task from today's session is go away and look at your favorite trading instrument, and want to open up the CoT report for that particular instrument. So we've looked a lot at FX today because that's my major asset class that I trade, but there are CoT details for Bitcoin now. Okay, anything that gets traded through those exchanges. So it could be pork bellies, could be gold, all right, could be some of the indexes. Okay, some particular commodities. All right, so open up the CoT report for that particular instrument and see what was the relationship between the big moves and the CoT positioning. All right, were those correlations between the moves and the positioning of the commercials and the non-commercials? As I said, I'm interested when their positioning is at extremes, okay, because that's when it's likely to snap back, but also when there is a crossover, okay, from when they cross over from commercials being, net long to net short, and non-commercials from being net long to net short, okay. Those are times and periods where it is useful to see what's going on in the market. So there you go, ladies and gentlemen. Right, before we switch across to the live charts, just to conclude, Monday Market Matters is here to support you in 2024. Right, so every Monday, 2:00 London time, we're here to help you with news, education, active trades, tools, and markets. I've said this all year. It's going to be an interesting year in markets. Okay, we've got about 6 months to the US elections. I think it's going to make it for an interesting year. So I hope that you will join us to enjoy that journey. So the CoT report gives us insight of the moves of the major players, okay, the major big dogs operating in markets. It's released every Friday, and it basically shows the positioning of the commercials, the non-commercials, and the small speculators. General, as a rule of thumb, don't fight the commercials. And as I said, when we get to extremes and when the comms and the non-comms flip, is when big moves may occur. And because of that reason, it tends to suit swing and longer term trading. If you're trading a 15-minute chart, right, looking at the CoT report, is probably not going to help you massively. However, as I said right at the start, understanding the CoT report, understanding how the big boys are positioned is a useful education for all traders. It's something that all traders should know. And as I said, I'm just giving you a basic introduction. There's a huge host of rabbit holes that you can go down. Okay, as you want to learn more and understand more, and that's absolutely fantastic. But this is just a case of an introduction to help you. So, Michael says, full of insight for me. Thanks, thanks a lot. You're very welcome, Michael. Okay, that's great feedback. Really appreciate hearing that. So, before we switch to the live charts, just remember, we will not be here next Monday. It's a bank holiday here in the UK, but we will be back in 2 weeks, okay, in the Mondays. So that'll be the 3rd of June, London times, 2 o'clock. And what we'll be covering for education on the Monday Market Matters is trading market structure. So if you're not already registered, then just take the QR code there, take a screenshot, and that will take you straight through to the register page, or go onto the website and register itself. So let's switch across to the live charts as we market move. But if you've got any questions or comments, okay, or even feedback, we really appreciate it. It's nice to have some of these nice comments here. We really appreciate it. But please, by all means, email englishdesk@activetrades.com. Just tell them that you're finding these sessions useful, because we are more likely to keep putting on such sessions if we hear such great feedback and that you're all using it and finding it helpful in your own trading journey. So Max says, thanks so much, Paul. Love your sessions and learn so much every time. That's really great. Thank you much. Really do appreciate the feedback. Always appreciated. So if you'll bear with me for a minute, what we'll do is we'll switch across to the live markets for the last 5-10 minutes and just have a little look at what's going on as we enter the start of the US session. So just bear with me a moment and we'll switch across. Okay, so I am hoping that you can hear my voice. Hope you can see my screens. So I'm just looking at this here. Okay, this is just ActivTrades platform here, and I just have a profile here for the major US indices as we start off the week. So what I've got here is that's the Dow, that's the Russell, that's the S&P 500, that's the Nasdaq. Okay, I just have for the US indices. Just as I said, we just want to see how are we looking at, and those of you who have joined me for most of these Monday Market Matters, what I say is that I'm always looking for correlation, okay, at the start of the markets, okay. What I want to see is preferably is to see them all working in unison. And when I look at this here, what I see is, as we've just opened out, clearly the Nasdaq has started off bullish, as did the S&P. The sort of Russell making up its mind. Actually, the Dow dropped. Okay, it looks like the Dow dropped. So I'm kind of, I always say give the first 15 to 20 minutes a miss anyway. Just watch how the markets turn, because especially on a Monday, because we've had geopolitical events happen over the weekend. So the markets open. The markets are just basically working their way through all of those orders. So let all of that kind of frantic shenanigans occur, and then after about 15-20 minutes you'll start to see markets will just calm down a little bit, and that just generally tends to provide you with a little bit better price action to be able to look at. But let's have a little look at this a little bit lower here, okay, on these time frames. So having looked at the huge big CoT reports, what we're looking at here is the kind of intraday basis of the openings of the US market. So I'm just always interested looking at what were particular kind of highs and lows previous day, previous week of the actual overall session. But yeah, you can see that from the openness of the 15-minute chart in the Dow, we pumped down, and actually it looks like we're reversing so far. Yeah, big 5-minute candle there. Let's just have a little look at this here on the 1-minute chart. Yeah, we just literally false breakout there. That's what we talked about a week or two ago. False breakout of the level, and then we've just reversed off that. Okay, but yeah, it was certainly a pump to the downside to begin with. If I look at that compared to the Nasdaq, as you can see, the Nasdaq just basically just rallied its way there right from the open. Really sort of just ploughed its way north. Just let's have a look at that. So I'll type these drawings up in a moment. Yeah, you can just see it's just opened and gone. There we go. Opened, and just basically decided to fly. There we go. Look at that 1-minute chart. Yeah, so So as I said, if I just look at that here, the you know Nasdaq has rallied. The Dow kind of collapsed, and then it's tried to rally back up. As I said, I like to see them all in correlation, or all moving together. That makes me much happier. Okay, it gives me a bit more confidence. I know some people might not might disagree with it, and that's absolutely fine. That's what makes a market. People, they can trade how they wish, how they see fit. I know that as Paul Tudor Jones says, you don't need to be a hero. It's about just finding the environments that suit you best. Okay, and that's when they're all in correlation, that's what tends to suit me best. Okay, so S&P, as you can see from the open, is just literally just been launching its way higher there. Okay, absolutely, flinging itself down there. So just as I said, I'm just always interested in the kind of those highs and lows of the pre-session. Okay, just see how that does the market react to it. Well, today we kind of came down into that level and then just basically just bounced off it there, and we just rallied our way up strongly from there. So I've got the S&P on the 5 minute. I've got Nasdaq still on the 1 minute. Dow there on the 1 minute. Maybe they bring the Russell. Yeah, so the Russell. Yeah, the Russell, came down beforehand and it's just popped its way up. But the Nasdaq and the S&P look pretty similar, don't they? All right, remember that's a 1 minute chart. There's a 5 minute chart, but they're pretty similar. They've been very bullish. And as I said on my own Monday market update, okay, they had they traded to new highs last week. Okay, I think Nasdaq closed at weekly new highs, right? But they didn't. But they did trade to all-time highs. They just didn't close up there. Whereas the Dow, the Dow and the Russell are lagging a little bit, and I'd say that's what we're just seeing here. That basically Nasdaq and S&P are leading us off. Dow is just lagging a little bit. The kind of thing I'd be interested with the Dow here, which I might watch after we do finish, is that that 50 period moving average there, we've flipped it, we've turned it over, right, and we've held above it, just pinned off it. So it wouldn't surprise me if we at least went to yesterday's high, that 200 period moving average. That's what we sort of just be looking at here. Well, it's not even waiting for me, is it? It's just literally launching itself up there, and Nasdaq is just basically powering ahead. Just even look on the higher time frames and everything. No, it's just bang. It's just actually that's just let's just see. There that would be let's just see if we're going to go up to last week's highs. I would suggest we do. Let's just draw it in. Previous week's high there. I would suggest the previous week's high Nasdaq is going to act like a magnet, and it's going to draw it up to there. And how it responds there is what I'll be looking at. How does it respond there? What does it give us? That's what we're interested in. Okay, this has been a great bump, but as I said, I always give the first kind of 20 minutes a miss anyway on a Monday, just because it can be a little bit volatile after the weekend. But I'll be looking to see if price gets up to that previous week's high, what does it do when it gets there? How does it play? That's what I'll be particularly looking at for on that session there. Okay, ladies and gentlemen. Well, what we'll do is we'll draw it to a close there. Okay, so wait and watch to see what happens as we get towards the end of the hour, and then also into the next sort of what is effectively 10 to 11 EST. All right, that is always an interesting hour to trade. I hope you have found that useful, ladies and gentlemen. Okay, and that it's I hope that's given you just a little bit of insight into the CoT report. Okay, what it is, how it's created, what it's telling us, and actually, how it basically can be used in your own trading. And as always, I wish you the best of success in your own trading, ladies and gentlemen. And remember, we're not here next week, but we will be back in 2 weeks' time, and we'll be talking about trading market structure. Okay, so just to answer, Simon, you can. There you go. You can that just give you some of the details. There you go. Excellent. All right. Well, listen, have a great trading week, everybody. And you'll do it. Yes, Laura, there should be a recording of this webinar. And what happens is normally it can be sometimes maybe a week or two later, it comes up on the actual, on the website. So if you look on the ActivTrades website, and if you look under webinar archive, you'll see it there. Okay. Thanks, Max. Yeah, you're very welcome. All right. Yeah, thanks. You're very, very welcome. All right. Appreciate the feedback. Thanks very much for coming, everybody. Thanks. I hope you have a great, fabulous trading week. And I will speak to you in 2 weeks' time. Take care, everybody, and trade well. Cheers.